All right, guys, here we go. Tuesday, August 20th. Indeed. Couple things. We open up a little bearishness out of Italy, but then also a little bit of head fake. And we were, as a room, we were like 72% neutral. Generally, when we're neutral, we get a move up or down. We get a decent move after the open. So I was looking at where's the breakout of a consolidation box going to be where guys potentially get trapped. And so if I play this out, this was right on the open, right after the open. There was two sequences. I believe this was it at around 1875. You should hear green edge zone buying and then see a green mark on the right side. It's when buying comes in and it can't go up. Punch a guy in the face, and then the downside indeed could become the right side if you're looking to sell it. Not when selling comes in all the time, but when buying comes in and it doesn't go up. How many times have I said that? So you should hear the audio. You didn't because it came in a little too fast. There it is. So there's two of them, 1875 and 1875. So live, I'm saying if you want to get short, looking to leave this box in this consolidation, buying is coming in, and they're about to laugh at this SOB. Buying comes in, you punch a guy in the face, and he doesn't flinch. I'm going the other way. So is price. Buying comes in, should go up. It doesn't. So then the downside becomes the right side and you get a little bit of a head start. Just remember the definition of good location is it goes your way ASAP. Quicker goes your way, the better. Does anybody put on a trade and say, I'd rather it take a while before I start getting paid? You know, I like to take a lot of heat and then I get paid. That's the way I trade. Nobody would say that. So that's crazy. Let's get rid of this chart for now because it did break all the way down to like 14, 15, 10, made new lows at 4, and then came back. What was the bottom? Who knows about calling lows and highs? Let's just talk about a pattern I started talking about, and people in the room liked it. It was, listen, this is a couple swing highs. There's like 2 or 3 or 4 of them. This is a consolidation box. So before you know any of this, what you do know is that this market puts in a low. By the way, this was the 18 even in the box. I was looking to get broken right in here. And we got it. This entire box from before the open. And we got some nice selling. But point I'm trying to make now is this consolidation box. You put in a low, you fail to make a low. When you put in this low, the NASDAQ didn't go along with it. But you don't know if this is a failure, these lows in here. Nobody does. All right. You could anticipate they might be a failure. And then when you start to test these guys, you could rest assured that there's breakout traders in here. Why are there breakout traders in here? Because look how sweet these swing highs are. They should jump up. Heck, I might have been a swing or a breakout trader in here. So what you do is it chops a little sideways to higher, never gives you the breakout, and then whoosh, comes down in here. What do you think happens to people who are long looking for the breakout when they see this? They're pissed. They're puking it, causing it to go lower. And like we said during this time, that, hold on, that it's just Trump tweeting critiques against the media. This area, all right, was going to be hard to blast back through for a while. Why? Because the people long trying to play the breakout are now trying to sell it where they really felt the heat and it went down fast. Remember, when you're long, you're a seller. Some of them sold it, puked it all the way down to the low, and then there's people that have to get the inventory's got to get cleared away to make a path to go up. What I call that is the other side of the valley. There's X amount of longs here trying to get the market to go up when you have a pattern of swing highs in there. Then there's less longs on the other side of the valley. Less longs equals less longs equals less sellers equals more upside. Know that equation. That's what you got in here, that whole area. That's why the path to go up was cleared, because the sellers that were all probably in here all these X's, let's pretend, are sellers, right? Why are there all sellers all up in here? Because there's a lot of breakout longs that were getting collected in there. When it comes down like that and retests, guess what all those guys do? Disappear. So when there's less sellers, it's just an easier path in the price of anything to go up. You got to have that dynamic play out. And so when you look for bigger, like, profit targets, let's say you're long from 13 or 14 and you want to take it 10 points, that's a heck of a winner. In order to get big moves, you need either a big story that comes across the wire that surprises the hell out of the market, or you need a pattern that just shook out longs. You need less longs if you're long and you're looking for a big move up. If it's a crowded trade, it's like too many people on a boat. It's hard for it to continue to float. You're going to have to throw a lot of people off. So you have to shake out weak longs in order to have a sustained rally in the price of anything. Too many people in a long trade, price cannot stabilize. It's hard for price to not only stay where it's at, it's much harder for it to continue to rise if too many people are betting on it to go up. So you're going to have to at least shake them out. That's what this dynamic was. It's readable in real time, but you got to be looking for it. You got to understand why you're looking for it, and it's a pattern. Hey, listen, when there's a super obvious pattern to everybody else, it ain't going to work. Going back to the crowded trade example. There's too many people in a boat and someone were to yell, hey, there's too many people in this boat, we're sinking, we're all going to die unless we throw 20 people off. Guess what? They'll probably throw 25 or 30. They'll overdo it a little bit just in the emotion. Then they'll settle down. We got 20. I think we got 30. Well, leave them off. We're going to float now. Some of the people who are weak went over. Some strong people went over. They were just on the edge and got nudged off. Right? So it happens. But you're going to have a pattern where it shows that dynamic playing out, and the other side of a valley is a way to look at it. Less longs, less sellers, easier path to go up. That's important. And like I'm going to start saying, I think at the end of all my videos, Paul Tudor Jones said, losers add to losers. It's a drug. Emotion is like a drug. It's like it's an intoxicant that just makes you do things you didn't think you were capable of doing. And as soon as you're wrong and you buy something here and it goes against you, you tend to want to buy more. Goes against you, buy more. Adding to losers is something that's too common among people who trade, and it's catastrophic. It only works, or I shouldn't say it only works. It's only done because once in a while it'll work and save your ass, or at least you think it saves your ass. The one time it doesn't work, gives back everything it saved you and then some, and is a really tough psychological barrier to jump over. Don't do it. You got to work on getting out. And if you don't, you're going to fall victim to adding to losers, and you're setting yourself up for a big, big loss. So understand patterns, what they mean, and the dynamic of after you buy it, you're a seller.